To start things off, this has been the topic of, talk of town. But now that the US has imposed reciprocal tariffs on Sri Lanka, can you give our viewers kind of overview of the current state of things?
Yeah, so I think they maybe go back to April. It was April 2nd that when this first announcement came, where most of the countries' reciprocal tariffs were seen as a complete surprise when Sri Lanka got 44% on 2nd of April. And then within few days it was paused, and of course additional 10% was applied on everybody, all the countries in the world.
Yeah.
So during that period of the pause, most of the countries went to US government and started to negotiate and see what are the rates possible for the original rates to come down to. And Sri Lanka ended up at, of course, 20%, as we all know. And as a result, we are, at least relatively speaking, we are in the right bucket, because not many other countries are in the same area, is not lower than us. The whole world of manufacturing into about 3 buckets,
Right.
and that has been quite challenging, especially when you look at it from a supply chain perspective, because when different countries have different rates for different products.
How do you think the future is going to be? Are there any indications that we can look out for future shocks like this?
Where relatively speaking, we are not too bad.
Yeah.
But having said that, I think we need to close that, because so far I think the documents have not been signed, the agreements have not been closed. So still some negotiations are happening. So on one side, we need to close. So that's the challenge we are in at the moment, and the global supply chain is going through that issue.
Yeah.
And that has paused a lot of investments that are happening, growth-related initiatives that are happening. So I think the dynamics are very challenging, and they're very volatile and uncertain at the moment. But of course, we need to play the short term and see how things are moving, and ensure that we respond to some of those changes very quickly and in a manner that we are agile enough to be ahead of the competition.
US reciprocal tariffs are upon us. And what does it all mean? We spoke about all of this and more with Hasitha Premaratne. Stay tuned.
When you have an ambition, trust your instincts, move forward. This is your moment to shape your future, to be independent, to strengthen yourself. Your time is now. Accelerate your progress, empowering your progress for a fulfilled life. Union Assurance.
For 30 years, LMD has been the voice of business in Sri Lanka, capturing the pulse of the nation's corporate landscape through its iconic covers. Each cover tells a story, from the first edition in 1994 to the present day, narrating key moments, leaders and trends that have shaped Sri Lanka's business ecosystem. Over the years, LMD covers have featured thought leaders, business pioneers and game-changing innovations, reflecting the evolution of industries and the economy. As we celebrate 30 years, these covers represent more than just publications. They are a testament to LMD's legacy of excellence in business journalism and its unwavering commitment to being Sri Lanka's leading voice of business. LMD, Sri Lanka's voice of business, a legacy of 30 years.
Hello and welcome to LMDtv. The topic of conversation today is tariff mitigation. And I'm here with Hasitha Premaratne, the Group Managing Director of Brandix. Welcome to our show.
Thank you.
To start things off, this has been the topic of, talk of town. But now that the US has imposed reciprocal tariffs on Sri Lanka, can you give our viewers kind of overview of the current state of things?
Yeah, so I think I'll maybe go back to April. It was April 2nd that when this first announcement came, where most of the countries' reciprocal tariffs were seen as a complete surprise when Sri Lanka got 44% on 2nd of April. And then within few days it was paused, and of course additional 10% was applied on everybody, all the countries in the world.
Yeah.
And we got used to kind of how to manage that during the first few months, which was actually till about mid-July.
Yeah.
And then, of course, the pause ended, and then the new tariff versions came in. So during that period of the pause, most of the countries went to US government and started to negotiate and see what are the rates possible for the original rates to come down to. And Sri Lanka ended up at, of course, 20%, as we all know. So 20% in the context of our export peers, like, for example, Bangladesh, Pakistan, Vietnam, Cambodia, Myanmar, Indonesia, Philippines. So all of those countries are in the range of 19 to 20% bucket. So we are in that range, which is the good news. And as a result, we are, at least relatively speaking, we are in the right bucket, because not many other countries are in the same area, is not lower than us. Of course, India is, as you know, was 25% originally, and that moved to 50% because of this additional 25% tariff that came in. China was always higher than us, even pre-2nd of April. China was about 20% higher than rest of the world in tariffs. And then it was pushed to 55% and later paused to stay at 30% for most goods. But today, and I think by November, there is a possibility that the pause will end and it will go back to 55%. So the two big manufacturing giants of the world, that is India and China, being at 55% range, and rest of the world being at around, I mean, some of the countries like ourselves and the bucket that I spoke about earlier, hanging around 1920, and then another group of countries, particularly the African nations, in the range of 10 to 15%. Have kind of put the whole world of manufacturing into about three buckets. And that has been quite challenging, especially when you look at it from a supply chain perspective, because when different countries have different rates for different products, it creates a lot of... It's not a level field at all.
Right, yes, suppose. And how do you think the future is going to be? Are there any indications that we can look out for future shocks like this?
Yeah, so the 20% that we have got, initial, we need to first sign and freeze it, right? So that's something that the government need to work on. And I think the government and the officials did a great job in terms of initial negotiations to get to where we are today and be among that group of countries where, relatively speaking, we are not too bad. But having said that, I think we need to close that, because so far I think the documents have not been signed, the agreements have not been closed, so still some negotiations are happening. So on one side we need to close at least at 20% and say that that's be signed and sealed, because it cannot we cannot afford for it to go up again. On the other side, also other countries are further negotiating it down, the 20% down, and there were rumors that some of these countries might get a better rate, like 15%, etc., because they are trying to, negotiate the trade options that are available. It's a give and take game. And in the context of that, it creates a lot of uncertainty, because tomorrow morning when you wake up, you don't know whether another competitive nation will be lower than you, right? So that's the challenge we are in at the moment, and the global supply chain is going through that issue, and that has paused a lot of investments that are happening, growth related initiatives that are happening, because you're not sure where to make your investments, because things are changing any moment. So I think the dynamics are very challenging, and they're very volatile and uncertain at the moment. But of course, we need to play the short term and see how things are moving, and ensure that we respond to some of those changes very quickly and in a manner that we are agile enough to be ahead of the competition.
And from what I gathered, we are in a challenging but comparatively okay bucket, since most of our peers are in it. But how are these tariffs at 20%? How is it going to impact US-based businesses?
Yeah, that's a good question, because I think we are already, Sri Lanka, like most of the other countries in the world, already had HS code based tariffs to US. For example, if you look at some of the products, cotton underwear starts at about 6 to 7% and goes up to 32% when it comes to the synthetic tops and some of the other products. On average, we are in the range of 15 to 17%, because most of the products cotton blends with synthetics, etc., are actually coming in that range of duty. Now, on top of that, when you have another 20% adding, obviously you're talking about a significant amount of duty coming into your products. So this has created a challenge. So this first reaction of all the buyers, of all our customers, was to see how we need to share this impact. So they came to us as early as April of this year and negotiated that first 10%, how it need to get shared between us and buyers, and I'm sure that part of the piece will get passed on to the consumer over time, not immediately, but over time. And it ultimately has to get shared between the consumer, the brand, which is our customer, and then the supply chain, which is ourselves, and of course the rest of the supply chain, like
The raw
raw materials, etc. But the concern today is that the way in which the duty structures are moving, how fast and how soon some of these changes can be done, and how that will impact your short-term profitability on one side, like the short-term survival, and on the other side, it's also about how you kind of create a sustainable model for pricing, where this sharing between the different parties in the value chain is being done in such a way that it is fair and it is absorbable.
Yeah, for sure.
Now, for example, if you look at our context, we had to first do the negotiations for the 10%, and then when the second 10% came on top of that, there was another round of conversations to see how that need to get shared as well. So it's tough because this industry is not a very high margin type of industry to absorb all these tariffs. So it's getting squeezed in the middle. Of course, what it has done to us is to say that we cannot say no. Right, we have to take something, and we had to share some part of the duty impact. And once we took the hit on our pricing, because it comes in the form of a price reduction, after that, obviously, we will have to go back and see how our cost structures can be adjusted, not just as an incremental reduction, but as more of a transformational reduction, because these are going to be more permanent reductions. So that's putting a lot of pressure on the cost structure. We need to attack on the wastage that we have and improve our productivity so that we can stay still competitive in this new tariff environment.
Wow. And talking about the new environment, I want to ask you something that you said in a previous answer, that China and India are, at 50%, 55%. How is that influencing us?
Yeah, that's quite interesting because these giants won't just wait, because obviously their rates being higher, meaning the competitiveness of Chinese and Indian exports to US will become less competitive, and that forces them to move towards other markets. So what has happened in the recent months is that these companies in China and India have been moving into European, Asian markets more aggressively, and they cut the price because they have the capacities open. So obviously they have to take the orders, and they'll try to cut the prices down even further and take those orders. So what it has done is that it has brought in more competition into the non-US business as well. The business that we were exporting to Europe and rest of Asia, etc., has become more price sensitive because these companies have gone and undercut the prices. So it's not only the US business that has come under the price pressure, it's also the non-US business that has come under price pressure because of this situation. Because it's not that the tariffs, US tariffs, have an impact on the US goods only. It's also for the rest of the basket of exports as well. So that is a huge challenge at the moment. So we are working through different options, because the natural instinct was for people to look for non-US business.
Exactly. That was what we were talking about a few months ago.
Exactly. Diversify your exports to other countries and see. But then everybody starts diversifying, and there is more competition, more supply to those markets. And those buyers in those markets naturally have an advantage because everybody is trying to
Get them.
supply to those markets. So that creates a price challenge, which is an issue. But if you look at as of now, I think for the first, maybe from April to September, the volumes wise, we were okay. Both for US and non-US business, the volumes continued. And we've seen if the right prices are offered, which are very challenging prices, if you offer, there is still volume coming in. But the bigger problem is that at those price points, how do we have a cost structure that is profitable and sustainable for the future?
It's time now to take a very short break, but we soon be back to talk more about tariffs.
Display your brand message on digital screens at prime locations. The largest digital advertising network in Sri Lanka. Emerging Media.
Welcome back to the show. We're in conversation with the Group Managing Director of Brandix, Hasitha Premaratne. Hasitha, I don't know if this is an unfair question, but price seems to be something that we might not really have a leverage on. In terms of the long term, what strategies should Sri Lanka adopt to make sure that we are competitive?
Yes, so Sri Lanka, I think over the years, if you look at our primary competitive edge has been around the quality and the reliability. And on top of that, the sustainable business model. We need our ESG framework, the environment, social, governance, compliance has been seen as quite up there compared to most of the other peer countries.
Right.
So as a result, that has been a value proposition for the country to stand up. Now, talking about sustainability, ESG, I think current US leadership is not taking it as serious as some of the previous regimes, but Europe has the enforcements as well as the emphasis towards sustainability initiatives to continue. And sustainability was a topic that was very serious right through. And I'm sure there might be a little bit of a pause right now, or a little bit of a slowdown on that impact for the US side a little bit, but that in the long term will come back. So sustainability will be one of our differentiating factors as a country. When I say sustainability, I'm talking about the ESG framework as well. So the focus on the environment, social, and the governance aspects, which we look at with going beyond compliance.
Yes.
And offering more of a broader framework to look after all our stakeholders, not just shareholders, but all the stakeholders, and ensure that all stakeholders are happy in the context of what we do. This is something that has will continue to be an emphasis and a differentiating factor for the country as well. So those two over the years have kept us strong, and I'm sure it has to, it will in the future as well, and we need to keep at the cutting edge of that aspect. But that said, the other big part that adjoined with this tariff conversation, like I said before, is to ensure that you have the right cost structure in play.
Right. Yes.
Right. So for you to get there, you need to get your productivity up. You need to transform your cost structure in terms of the overhead reductions, etc., and attack the waste so that you can really bring your cost per unit down, which then can be still profitable in the new world of pricing that comes out with this tariff environment. So that piece of adjustment will become a big focus, which probably will demand a reset in the industry as well. So that's happening in most of the companies now. So all these aspects, combination of things will go on. And even at Brandix, if you look at, we're driving our transformation agenda very aggressively. Our sustainability agenda is of course on track, and we've been doing that for many years. No change, and we will continue that commitment to the our customers, our stakeholders, everybody. In fact, our sustainability report for this year will be launched in a week, in the next week, and that will carry all our commitments towards the environment, social, and the governance aspects as well. So I think those value propositions will have to continue for us to stay competitive and be relevant. Now, another final point on Sri Lanka is that when Indian manufacturing is expensive due to the higher tariffs, there is also interest from Indian vendors to come and at least take capacities in Sri Lanka and manufacture in Sri Lanka and export from Sri Lanka. Happening in a small way. I don't know how far it will go. Of course, there's a lot of talk about the Indian tariff rate coming down. So in the world of uncertainty that we are living in, we are not seeing too much of a, how should I say, too much of a investment commitment yet.
Of course.
Because
Nobody can
make those judgments at this stage. We need a little more certainty. But once the agreements are signed and things are looking a little more certain, there might be a possibility, depending on how the rest of the world's rates, especially the India's tariff rate is, depending on that, there might be more interest here as well.
It's been such an interesting conversation, and in a world of uncertainty, if I finish off like this, I think you touched upon this in several answers. But if we focus on the Sri Lankan exporter, who is at the center of all of this, taking all of this in, what are your recommendations on how they can balance short, mid, and long-term priorities?
I think short term, there is no question. You will have to absorb the part of that tariff impact, which means your margins are going to come under pressure. So your cash flows need to be protected, and you need to transform your cost structure fast as possible.
Yes.
And that is the order of the day in the short term. In the medium term, of course, you need to look at how some of your sustainability initiatives, innovation initiatives, and other related areas will come into play to offer a better product and get a better price over time, right? But having said that, the US versus non-US business, everybody is talking about the non-US business.
Yeah.
That's something that will be very interesting.
Right.
In fact, for Sri Lankan exporters, Indian domestic market is something that is still quite big and should be very much a place to be. But right now, all the Indian manufacturers are also trying to sell within India because of the US tariffs. So there will be a bit of a crowded environment in the Indian domestic market today, but I'm sure over time, with that market growing significantly, that we will be another opportunity to look at and see how we can export there. Of course, we need to get our free trade agreement, which has a cap of 8 million pieces duty free to India. That's the maximum you can go duty free. So I think government should look at the negotiations to restart with the Indian government and see what needs to be done to increase that cap, because if it increases, there'll be much more opportunity for us to look at the Indian domestic market as a potential alternative to some of these US challenges that we are going through. Apart from that, Europe is duty free. I think the GSP Plus is likely to extend, so we should see more runway there as well. And some of the other markets. But the challenge right now is everybody's, like I said, India and China looking at other markets. So other markets will be crowded in the short term, but medium to long term, that's something that you need to really look at. And being competitive with the right pricing, with the right product, there will be still opportunities to grab in these markets as well.
We'll be sitting at the edge of our seat.
Absolutely.
Thank you, Hasitha. We've been in conversation with the Group Managing Director of Brandix, Hasitha Premaratne. Thank you very much for an insightful conversation.
Thank you. Thanks for having me.
And thank you to all our viewers for joining us. Until next time, take care. Don't forget to subscribe to our YouTube channel and follow us on Facebook, LinkedIn, Instagram, and X. Thank you for watching and stay safe.